Hello and namaskar everyone to the second episode. I'm Prashant and today I'm discussing about the discoveries I have made after spending 33 hours of trading. I'm discussing price action and trading concepts. But before I begin, here is a short introduction about myself. So I'm Prashant Jain. I'm trading from almost 2012. It has been 8 years that I'm trading and trading has given me the life full of freedom. Currently, I'm sitting here on the beach while recording this video. So let us begin. Perfect strategy. Well, you don't need to learn a perfect strategy to earn money in the stock market. Because when I started trading, I have tried almost all the indicators present in the market, a lot of strategies, but slowly and gradually I realized that it is not the strategy or indicators which has given me the success, but it is the mindset, the psychology behind it, which gave me the success. So you should work on your mindset and your trading psychology rather than trying indicators and strategies. This is the advice I would like to give you to all the new traders who do not fall for a perfect strategy, but rather work on your mindset and your psychology because it will help you become a professional trader very quickly. I have also made a separate video on trading psychology where I'm discussing about it. So you can go and watch that. I'll give the link in the description. Risk management. Now trading psychology is just first part. The second part of it is risk management. What is risk management? Risk management, as the name suggests, it is managing the risk. Risk is losses. Managing your losses in stock market is risk management. So when I started trading back in 2012, I still remember the first stock I bought was Reliance of 600 and sold it around 1000 or 900. And I traded several other stocks after that. I was earning profit. Slowly, I realized that I'm paying huge brokerage. So I moved on to a different broker and opened a new account with a capital of 1 lakh. But I ended up wiping it off in just 1 week. Can you imagine? I wiped off capital of 1 lakh in just 1 week. And that is when I have learned my first lesson to always have a stop loss in the market. Because it will save you like a bulletproof jacket, saves our Indian soldiers. But even after that big losses, I did not stop. I kept learning about stock market and investments, which made me what I am today. So this is why risk management is important as well as the trading psychology. So I'll tell you how you can apply risk management and it will give you profit. It will help you earn profit even on the losing strategies, which is what I had neglected in the beginning. So I'll give you the example. Let's say, for an example, there is a stock of 100 rupees and stop loss comes to 40 rupees. So as per the risk management, I should always try to get a profit of twice as much as my losses are. There are traders who want to take a profit of the equal amount as their losses are, but they are inexperienced traders. If you are an experienced trader and you want to become profitable in the long run, and you should always wait for at least a target of twice as much as your stop loss is. So if my stop loss is 40, my target will be 80, which means I will exit at 180. But on the first trade, my stop loss hit and there is a loss of 40 rupees. On the second trade, same thing, stop loss of 40, risk reward of 1:2, which gives a target of 180 and I exit at 180, gave me a profit of 80. And same thing I done for the next 10 trades. So how many trades I took? I took a total number of trades, 10 trades. Out of those 10 trades, I only won 4 of them and I lost 6 trades, which means my winning percentage is only 40%, which is a losing strategy. Even though my strategy was a losing one, I was still able to get a profit. I was still able to earn a profit of 120. Why? It is only because of the trading psychology. What is trading psychology? I'll give you a basic example of trading psychology. What it is. Trading psychology is not to hold on to your losses than 40 and not to close your position before your target of 80 is met. That was the basic trading psychology concept I have applied on this trading. I did not took a loss more than 40, and I did not close my position before target of 80, which helped me earn a profit of 120. So I applied this trading psychology along with a risk management of 1:2. And both of those has helped me earn a profit of 120 even on a losing strategy. Now with that, I would like to tell you, trading strategy is not that important. What holds more importance is trading psychology. It holds up to 50% of your trading system. 50% weightage of your trading system should be of trading psychology. 30% of it goes to risk management, and only 20% of it makes it to the trading strategy. Even though your trading strategy is a losing one, you would still earn profit as long as your trading psychology and your risk management is intact. Now, why prices goes up and down? As soon as I purchase a stock, this is what happens when I started trading in the beginning, and it did not go up, even though there is a lot of good news in the market. And I thought that prices are going up and down because of the indicators. That was funny. Well, answer to this is not indicators, but stock market or any financial market. Wherever money is involved, there will always be big players who are manipulating the market. And you can also refer to the recent web series which we had, Scam 1992, wherein Harshad Mehta and all the bear cartel was manipulating the stock market. And it is still being manipulated with big players who have huge capital, like mutual funds, like FIIs, like DIIs, like other big traders. They are manipulating the stocks, but who are they earning from? Retail traders are falling prey in their traps and losing money to big traders. So if you do not want to lose money in stock market, then first, either you don't trade at all and save all of your money, or you can still trade but with knowledge. What knowledge do you require to not lose in stock market? The basic knowledge you require in stock market is, as I was discussing in the beginning, trading psychology, risk management, and the third important thing is not trading strategy. Instead, learn price movements, because price is what makes the indicators. When price moves at certain level, from certain level, it will give you all the information you will ever need to be able to understand what buyers and sellers are doing, to be able to understand what big players are doing. What are they going to do next? What are they going to do next? Once you know all of those things, once you have all that knowledge, you will now work with them instead against them. And when you work with them, you know that the price is going to go up, you will buy at that point of time. And you know that the price is going to go down, so you will sell at that point of time. That is how you should start learning in stock market. History repeats itself. Well, that is very true in stock market. Price always react to some levels which are generally called support and resistance level. There is a demand below or at support level. There is a supply below, above, or at resistance level. What are these levels? Support and resistance. What are these levels? I'll tell you how stock market works. Stock market works on simple law of demand and supply. Law of demand and supply. If you have learned in economics, you would have understood. If you have ever learned, if you ever had a subject called economics in your schools or in your higher educations, then you would know what are these demand and supply. If not, then I'll tell you what it is. Demand is nothing. Demand is the demand of anything. That people want that thing. And supply is people who are providing that thing. Whenever demand is more than the supply, price will go up. And whenever supply is more than demand, price will go down. I'll give you the example for you to be able to understand better. What is demand? Gold is in demand. Demand is more than supply. That's why prices are going up and up. And what is, I'll give you an example of potato. What is potato? There is demand of potato, but supply is more than demand. That's why prices are going down. Not going down, they are not so expensive also. This is the main concept behind how stock market works. So stock market works on the law of demand and supply. Whenever there is more demand, price will go up. Whenever there is more supply, price will go down. How would you know that there is more demand or there is more supply? Well, that is why we have support and resistance levels. So below support, there is demand. Above above resistance, there is supply. I'll tell you how it looks like. This is how demand and this is how a support and resistance looks like. These lines are support and resistance line. As you can see, price comes from here, goes up, it comes back. There is the demand, price marched up. Now there is supply, price goes down. There is a demand, price goes up, goes down. There is a demand, price goes up again, comes down. There is again demand, price goes up, goes down, goes up. There is a supply, price comes down. There is a demand, goes up, demand, supply, demand, supply. This is how it works. This is how stock market works. Demand and supply, support and resistance. This is what you should learn. This is how you begin to learn stock market. Best indicators. This is important because, to be honest, there is none. Best indicator. Which indicator is best used in trading in stock market? Well, to be honest, none. In my initial days of trading, I had used almost all of the indicators available and tried most of these trading strategies. I was able to earn money, but it never gave me the confidence of whether this indicator or this strategy will work this time or not. I always thought that price is moving because of the trading strategy, because of the signals generating on indicators. It's not like that. Prices, indicators, and strategies are the derivatives of price movement. When price moves, indicators and trading strategy will give you a signal. So rather you are learning about indicators and strategies, learn price movement, because that is how you will get to know when the price is going to go up and when the price is going to go down. And when you have learned the price movements and what does the price movement means, then you will have unlimited number of strategies and you will have unlimited number of indicators, which you can see right on the chart on your face without having to apply any indicator on the chart or any strategy on the chart. That's what the power of price action, price movement is. Stock volume. Volume, we can see charts. Volume, we can apply a volume indicator on our chart, but volume we see on chart, it does not show us buyers and sellers, but it shows the transaction between buyers and sellers. When somebody is buying a stock, there is somebody who is also selling a stock. So that transaction of buying one stock and selling one stock, that is one transaction, which is what we see when we plot our indicator called volume on the chart. Now you need to read the sentiments behind the volume and price movement. Sometimes we will see big candles, wide range candles with small volume. Sometimes we would see narrow range candles with more volume. So the basic rule is, if the price is going up, volume or bullish volume should also go up. If price is going up and the volume or bullish volume is going down, it means there is no strength in that up move. And what does that mean is price is going to fall in near future because there is no strength in the volume and in the price movement. Now, how you can learn and make money in stock market? Trust me, it is not that difficult which it looks like. I have wasted almost 2 or 3 years trying to figure this out. And there are a lot of courses available, a lot of online tutors who will help you learn trading in just 1 week. A lot of people giving you tips, unlimited videos, unlimited number of videos on YouTube, so much of content available in the market. And it is very hard to figure out who is right and who is wrong. Problem is not in trying all these strategies and knowledge which is available in the market, but it is the time and money which will be wasted. Money can also be recovered, but time is very important. Once time is gone, it can never be recovered. So charts, so don't fall for any trading courses or tips. Rather, start looking on charts every day and you will get all the information you need, because strategies and tips and indicators, everything are eventually coming from the price movements you see on the chart. So if you want, so I have also made a price action trading course. I'll give you my number in the description. You can send me a message to learn more about it. And in that price action trading course, I'm teaching from the beginning, from candlesticks to trends, trend lines, price action trading, volume analysis, price action trading strategies, everything which will help you become a profitable trader. Now, if you do not want to take the course, that's fine. I would advise you to spend time with charts and learn price movements, because that is going to help you a lot in your trading style in order for you to become a profitable trader. Things which has helped me a lot are meditation, trading psychology, trading mindset, risk management, and learning price movements. That's all you should know to earn money in stock market. I'll be making more videos in future as I get spare time, because I'm also traveling along with trading. Money is not the goal. Money was never the goal for me. Goal was freedom. Goal is freedom. Money was just the tool, which is what I've got from trading in stock market. So I'll see you in the next episode. Till then, peace.